Hello everyone, this is the media. Welcome to the channel. Today we're going to talk about an EV company that will go public via a SPAC merger with GigCapital3, currently trading under ticker GIK. The merger was announced with Lightning eMotors, and immediately the stock went up, rightly so, because anything dealing with EV is going to be very hot in 2021. Of course, in 2020, it was all about EV, but I think that it was more laying the groundwork for what to come in 2021. Because the transition is going to happen in 2021. Everyone is making and talking about production now. It's no longer, hey, we're going to do this. It's going to be, we're doing this, and this is going to happen. So I think when it comes to picking an EV stock, we want to focus on a company that talks about production and are very clear about their production deadlines and their capability and quality, and whether or not they have the product line, they know the product line well. So I took a deep dive into this company. So who are they? Lightning eMotors is a high-growth electric vehicle manufacturer focused on urban commercial zero-emission vehicles. Lightning eMotors is the only operator with a full range of Class 3.7 battery electric and fuel cell electric vehicles in production today. They are addressing a large and growing fleet electrification market. This market really covers medium and heavy-duty vocational vehicles, for example, ambulances, delivery trucks, bucket trucks, food trucks, school buses, coach buses, and etc. As far as production is concerned, Lightning eMotors are very confident in their ability to achieve production. In fact, Lightning eMotors has the country's largest commercial zero-emission fleet vehicle manufacturing facility in the U.S., with annual production capacity of 1,000 vehicles today and expanding to 3,000 in 2021 and over 20,000 by 2025. I think this is a huge selling point for 2021, and this is going to help them knock the ball out of the park. So this is very different than EV companies that dominate the headlines like NIO, Tesla, XPeng. And I think that with those companies, their current stock prices have those in calculation already. But if you look at a company like Lightning eMotors, they don't really get a lot of coverage. And so currently trading at $13, it's a bargain for what they're doing. But what I'm really impressed with this company is their quality. Because when we're talking about battery electric vehicles, there are three commercial BEV markets worldwide, and that's China, Europe, and the USA. And although right now China has the vast majority of BEVs on the road, however, their BEVs are not really known for their quality and are built for about 1 to 3 years of duty. However, Lightning eMotors, they're boasting that they use the highest quality components in their vehicles. And the highest parts are typically made outside of China, usually US, Europe, Japan, Taiwan, and South Korea. For example, the highest quality battery cells come from South Korea today: Samsung, LG Chem, and Panasonic. And we can validate this by looking at the leading US automotive manufacturers' choices of components. For instance, GM uses LG batteries, Tesla uses Panasonic, Jaguar uses LG. For this company, Lightning eMotors, as far as battery system, they use South Korea's. Traction motor, they use US. For their electric heating system, they use Germany. Electric air conditioning, Japan. Power steering, US. Air brake compressor, Japan. Onboard vehicle charging system, Taiwan. So I think this company really understands the importance of fleets, because when you're choosing to buy these fleets, your company is dependent, or your company's revenue is dependent on the reliability of these vehicles. So the fact that they're putting so much time, money, and efforts into building a vehicle with quality parts talks about their brand. So for that reason, I think this company is definitely worth $13.50 right now. If anything, I think it's a bargain. EV should always be a component of an investment portfolio. Even if we diversify, it should be a big component in order for us to capitalize on 2021 transitions over to electrification.